Welcome and thanks for joining us on Real Investment News. For your market close today, we have a special report. Crude oil is up by nearly 50%, and that is due to a weakening U.S. dollar, synchronized global economic growth and optimism, as well as aggressive bullish positioning by large funds. Now, we're going to bring in our analyst on Real Investment News, as well as Real Investment Advice, Jesse Colombo, who recently wrote an article on some important factors to take into consideration when looking at oil trends. Jesse, thanks for joining us today.
Thanks for having me on.
All right, so this article that you talked about, you hit into a lot of different points. So what are some of these trends that we need to be looking out for?
Well, oil's up 50% since the summer of 2017. So you have large bullish funds have been taking on 700,000 net futures contracts, which is the largest bullish position they've had since June 2014, which is right before the oil crash. My concern is that there's going to be another oil crash just because of this bullish positioning that they're going to eventually be forced to liquidate. And the smart money has a similar short position, about 700,000 net futures contracts. So that's typically what you see before a crash. You have everyone getting over to one side of the boat typically tips over. And I was discussing this last week before oil started to drop significantly. It's down nearly 5% today alone, and it broke through a major trend line that formed back in September. So it slashed right through that trend line.
Yeah, and tell me about some of these graphs that you have in your article. You are talking smart money, you're talking dumb money. Compare these to what we should be looking for and what you're seeing.
Sure. Well, the smart money are basically commercial hedgers. They are the market. They're the producers and users of oil. They're the Chevrons, the Exxons, the BPs, and so on. They know the market because they are the market. Whereas the dumb money are large funds. And you wouldn't think of funds or hedge funds as being dumb money, and they typically are not, but when they usually bet in the same direction and they develop a position that's so extreme, that's when they become the dumb money. They're the dumb money at the major market turning points. So right now, they're excessively bullish on oil, and when you have this sell-off, if you can see the chart, you can see it fell right underneath that uptrend line that formed back in September. So now basically it puts into play another price target or another support level, which is another uptrend line that formed back in June of 2017. So I want to see if it's going to try to gun for that support level. If so, if that breaks, then look out below. But already as it is, just the fact that it broke that uptrend line is very concerning. Same thing too, we're here in Houston. You have a lot of people own oil stocks or they work for the oil companies. So it's definitely a story that's of interest to people in this area and really globally.
Yeah, and I'm taking a look at this chart right here behind us, this 40 long-term support. What are we looking at when we're taking a look at that? And what are some of the worries, I guess, that you have? Or when should, people start to worry with everything?
Good question. Well, $40 per barrel in both West Texas Intermediate crude oil and Brent crude oil has acted like a magnet for prices. $40 per barrel was in 2009, when you had the big oil crash, that's where oil found support essentially at that level. And then same thing too, right around the 2015 oil bust, oil dropped around 40 and essentially kept on bouncing around that level. So it usually acts as a price magnet for oil. So I'm just looking to see if there's going to be further breakdown from this point on, that it's going to try to maybe gun for $40 per barrel in both Brent and WTI crude, West Texas Intermediate crude oil.
Do you have any predictions yourself? I know that this was something that you were kind of looking at a couple of, or last week at least you showed me, and now we're kind of seeing what you predicted happening.
Sure, well I wasn't predicting it as far as making a guarantee. I was just saying this is a major risk factor. When you have so many people taking such an extreme position that there's a very real risk that they're going to be forced to liquidate, in this case the speculators. So I'm not predicting a specific price that it's going to hit. I'm just saying these are risk factors, and the fact that it broke down, which happened after I wrote that report, is something that's really has me on edge, especially with what's happening in the stock market. It seems like oil and the stock market have been trading in tandem really since the summertime, and they both took off. As I said, oil's up 50% since the summer of 2017. And you have the stock market breaking down, and it seems like crude oil's dropping in sympathy.
Can you explain this for some of the graphs that you were showing here in your article?
In this particular chart, this is not crude oil, this is the US dollar. And the reason why I have this chart is because the US dollar is a very important factor variable that affects the price of crude oil and other commodities, and they trade inversely. So when you have a falling dollar, in our case, the U.S. dollar is down about 13% in the past year. That's one of the main reasons why oil rose so much, is because you have this falling dollar. So now there's a great risk for oil bulls, at least, that the dollar could rebound. And we were discussing the smart money in crude oil. Well, there's a smart money and dumb money in the Forex market or currency market, including the US dollar index futures, which is the chart that we're looking at. So the smart money is actually quite bullish on the US dollar. So that increases the probability that there's going to be some sort of a rebound. And if that happens, that's going to most likely push oil even lower. So similar to oil, there was a major uptrend line that started around September. And this is in the S&P 500. It slashed right through that uptrend line. And now it's just sitting just above the uptrend line that formed back at the beginning of beginning of 2017. I believe it was January 2017, but you can see it connects all those lows and it acts as a support going all the way up. So right now, that seems to be where the S&P 500 is resting. And I believe there's a high probability that there's going to be some bouncing around in between these two trend lines. The most recent one that was broken to the downside, and the one that it's sitting just above. I believe it's going to bounce around. It's going to try to work off the old oversold conditions, and then we'll take it from there and see what happens. Is it able to climb back up, or is it going to drop further below and break below that next trend line that's just sitting right above? And if that's the case, that's going to be really bad for oil as well. So, and you see similar, as I showed before, you see a similar uptrend line pattern happening in oil. So that's why I think it's worthwhile to look at both markets in addition to the currencies as well that affect crude oil prices.
Yep, absolutely. Jesse, thank you so much. I mean, this is a great analysis. Again, realinvestmentadvice.com. You can find that full analysis from Jesse Colombo there. We'll see you back here after the weekend. We hope you guys have a great weekend.